What to do when the market flips? There are several ways to grow your money, such as starting a business or investing in mutual funds and insurance policies. But a much more flexible and faster way to raise or double your money is to invest in the stock market, especially by trading stocks when you buy a car or a house and then sell the asset at a good margin. The stock trading strategy called flip is a method of generating profit by not holding stocks for the long term. In other words, short-term trading. In today's video, we are going to discuss how to take advantage of market flips. What is flipping? Flipping refers to buying an asset with a short holding period with the intention of selling it for a quick profit rather than waiting for long-term appreciation. Flipping is often used to describe short-term real estate transactions, as well as the activities of some investors in initial public offerings. While these are the most common use cases in finance, flipping can be used to broadly describe the purchase of an asset that will be sold in the short term for a profit, including cars, cryptocurrency, concert tickets, etc. How flipping works. Flipping is strongly associated with real estate, where it refers to the strategy of buying property and selling it over a short period of time, usually less than a year, for a profit. In real estate, investments are usually of two types. The first type is where real estate investors take properties that are a rapidly appreciating market and resell them with little or no additional investment in the physical property. This is a play on market conditions rather than the property itself. The second type is a rapid turnaround, in which the real estate investor uses their knowledge of what buyers want to improve undervalued properties with renovations or cosmetic changes, known as a reno turnaround. Risks of real estate flipping. Flipping has made a fortune in real estate, but it seems to generate more commercials than easily replicable results. Going into a warm market is the riskier of the two, as warm markets can cool down unexpectedly. If market conditions change before the property can be sold, the real estate investor is left with an asset that depreciates. Rolling back after upgrading an undervalued property is less dependent on market timing, but market conditions can still play a role. In reno trading, the investor makes an additional capital injection into the investment, which is expected to increase the value of the property by more than the combined cost of the purchase, renovations, maintenance costs during the renovation, and closing costs. While flipping seems simple and straightforward at first, it requires more than a casual understanding of real estate to be profitable. Flipping and wholesaling. Depending on your perspective, real estate investing also encompasses wholesaling. In wholesaling, a person interested in an undervalued and therefore convertible property enters into a contract to purchase a property subject to an inspection period, and then sells the rights to the contract to a real estate investor for a fee or percentage. This is a more formal relationship than a traditional hunting dog, and the property in question may or may not be traded to the ultimate purchaser. A wholesaler doesn't just look at properties just to flip. Wholesalers are looking for profitable properties and long-term appreciation bets for real estate investors. IPO flipping. The flip in the IPO sense is when an investor resells stock in the first few days or weeks after an IPO. These investors are benefiting from the IPO explosion that Hot Topics had in their early days. Change the IPO with blocks and guidelines is a somewhat ill-advised for novice investors, but a new issue should have some changes to create trading volume and market buzz after the IPO. IPO switching can also make financial sense, as many stocks see their highest prices in the first few weeks and months after an IPO and may struggle for some time before returning to those highs, if ever. How to flip stocks to build millions and earn more money. Trading stocks to make more money and make millions is no secret. In fact, you can also just flip other properties, like popular talk show host Ellen DeGeneres does. Ellen likes to buy houses in Los Angeles, touch them and spruce them up a bit, and then sell them. The big problem you've had lately is selling 15 million. How to flip stocks to earn money. In addition to selling mansions or real estate, you can trade stocks for profit and make millions. You can apply the same concept, buy and sell, in another term, trade. In reality, there are many things you can buy and sell. Some people buy and sell cars, others gold, silver, and precious metals. Some people sell domains and websites. There really are a lot of them, but on this page I talk about stocks and paper resources. The best thing about stocks is you don't need to touch up or polish them or make them look brand new like you do when buying and selling mansions or cars and etc. All you have to do is buy them while they are less than what they are worth right now. Then, wait for them to reach their true intrinsic value, or if you have your own price target. Once you reach your goal, sell them off. How can you make money out of stocks? You earn in two ways: the proceeds from your sale and when the company issues dividends. It is simple and easy, but requires a lot of patience and faith. Follow these 5 rules. Buy undervalued shares of premium companies. These shares are currently cheap because their price is below their fair market value. In short, at the moment they are cheap and their price is worth more than what is offered. Remember, only buy from premium companies as much as possible. Premium means better, superior, first class, and excellent companies. Have a BBP margin. This will help you earn more. Having this price spread means you only buy these shares below the BBP. In simple math, this gives you a lot more room to grow. Have a target price. Like any investment, we have a goal and a plan. In stock investing, we must have a target price. This is typically the stock's fair value, or whatever price is closest to the FV if the company is in very good shape. Sell your stock once it actually reaches your TP. Why sell it at TP or fair value? Because realistically speaking, it's the actual price that the stock is worth right now. Don't be too greedy if you still want to make a profit. You shouldn't have to wait any longer. Lastly, use your earnings to buy other undervalued stocks. Remember, you are building more money or more millions. If you stop now, you are not building anything, so let your money roll. Take the opportunity and time to buy undervalued stocks and sell them and profit when they reach their TP. If you constantly follow this strategy, you're not only building your stock portfolio, you're also building your stock value. Your wins and earnings will yield more wins and earnings. Not only that, you are also gaining financial skills and experience that you can teach your children or loved ones. You can follow our same strategy and concept by following the latest undervalued stocks here. Our recommended stocks are generally premium companies. The BBP and target price are also provided by Health. Always remember that investing and trading on the stock market involves risks. Make sure you are only using 20% or less of your money. Never invest all of your money. Above all, don't invest if you don't have a regular source of income. With that being said, it's time to end today's video. Press the like button and subscribe to our channel for more interesting stuff.